All right. Hello, everyone. How are you today? It's Kay. So this is the 12th of November, 2021 on Friday. So happy Friday, everyone. I hope you're having a great day today. So let's get started. I will check some charts today as usual. Screen the forex pairs and some other markets today and see what's happening. So let's get started. So this is a live stream. This is not a recorded video. This time it's a live stream. So hopefully you enjoy the live today. So yeah, so this is actually my second time screening charts since I took a day off today, and also yesterday I was relaxing. And since I got a car officially in Dubai, I have been driving around towns and enjoying the different places in Dubai. So tonight I will be going out and just enjoy the night in Dubai. So that's why I just decided to do a live right now and just discuss markets together and see what's happening. So yeah, let me change this window right here. Okay, and let me rephrase this window over here. All right, so how are you today, everyone? Good to see you. Once again, good to see you, and I hope you liked the video yesterday about the Senko Span A. So yeah, because Senko Span A is very important. You know, sometimes when you talk about the Kumo, people only focus on the Senko Span B, but actually Senko Span A is as important as Senko Span B, and that's why I took a video and uploaded it yesterday. So in case if you haven't watched yet, please watch and learn how you can identify the fake Senko Span A angle when you look at the charts. So yeah, so let's see who's here first. All right, Won and Minoru, good to see you. Thank you for joining. And Sarah, Ruth, and Joe, good to see you as well. Thank you for joining. Right, and Carbon, good to see you too. Yeah, so let's see. Ruth says, how was this week's trades? I only took one trade and that was a slight loss. So this week, myself is very slow. It's very slow because I decided to take days off this week, and I have been just enjoying Dubai season right now. So my trades are very, very slow this week. But the month of October was very good actually. I got almost like 40% return in the month of October alone. So that was good. And that's also the reason why I decided to go easy on my trades on the month of November. But whenever I see trends, I take trades, but I'm not really aggressive as October. So yeah, like this, I change the weight on how many times the screen charts and how I trace depending on my performance over time. So, but yeah, one thing for sure is that I screen charts every day for sure, at least 3 times. That's for sure. But sometimes, if I wanted to go easy on my trades, even if I see some trending pairs, trending markets, I don't take trades. I just watch, monitor, and see how it goes. So yeah, sometimes we need the distance between ourselves and the chart so that we can, you know, we don't rush to the market every day. Like sometimes if you give up on something, then it comes to you. So I think same applies on the tradings as well. All right, hello Orca, good to see you. Thank you for joining. All right, this week is pretty bad for me. Okay, so those are fake outs, and when market moves always happen late into New York. All right. Yeah. So I think the risk management is very important when you lose like that over time for 1 week. So of course you have to have very small losses every time you take trades. You make sure that you don't have big loss that you cannot cover in the future trades. So make sure that your losses should be very small, kept small, and then once you earn the big pips in the future, it covers the previous losses. But never take trades to win back the losses is also important. Basically follow your system, follow your own strategy, and just entry and exit, and calculate the risk management, and that's all we can do. Okay. Yeah, for myself, even if I find some fake outs on my trades, I won't feel anything because it happens on my strategy. I know that it happens, and I know the future big winners can cover these small losses, and that's why for myself it's totally okay, psychologically speaking. All right, Carbon says, hi Kaysen, how many pips of profit do you usually place stop to break even? In pips wise, if the market goes towards my direction more than 30 pips, then I will move it to break even. Yeah, but it depends on the market. Sometimes the market doesn't move 30 pips above or below. And if that's the case, then simply I have to look at, for example, N wave, or I have to look at some indication to move the stop loss to break even. But one thing for sure is that you have to see the market going towards a direction after the entry, and then you move it to break even. Because if you move it too soon, then you have too many break even trades, and you can run profits over time. So yeah, make sure that you confirm the market goes towards the direction and set the break even line. Hello Yumit, good to see you. Thank you for joining. So yeah, so for those who are joining right now on the live stream, this is here is a world clock. So you get the times in Los Angeles, and New York, London, Dubai, and New Delhi, Singapore, Tokyo, and UTC time zone. So this is exactly the times right now on your location. In case you see this on the archive, this live stream is happening at this time right here. So I was sleeping and I just woke up, so my voice is a bit low, so I have to, speak a bit more until my throat becomes a normal condition. So yeah, so shall we look at some markets today? So let's see which one is moving. So once again, this is my second time, but there was no good setups, and that's why simply I close the charts, and this is my second time screening. So let's see how the market has been moving after the previous screening. So what I usually do is I screen charts by the daily chart first and see which one's trending and ranging. So here is Euro USD, and it's going down simply because the Kumo's down, Kijun Sen, Tenkan Sen down, and the Chikou span below the candles. So after the market broke the previous support level, 1.1525 area, it's going down. So I will just mark this one, Euro USD. And this one, I shared my analysis on TradingView, because if you see here, I put the analysis Euro USD downtrending by Ichimoku, and I mentioned that it's gonna be going down continuously. So I posted this one yesterday, and yesterday the market went a bit more downtrend, and now today's doji candle, it's kind of ranging right now. But overall, market is still bearish because of this Ichimoku confirmation. So in this case, I continuously look for the sell chance. So that's one, Euro USD. And let me quickly screen other charts. Euro AUD is retracing backwards now above the Kijun Sen, so no trace. Euro Pound is ranging. Euro JPY is downtrending, but this is below the Kijun Sen, Chikou span touching, so I don't touch this one in this case. But you can draw the line, horizontal line here at this level around 130.62, and it may bounce and it goes up, so we'll see. But right now there is no trend as per Ichimoku, so I don't trade in this case. Euro CAD is ranging as well. Euro Swiss franc is also ranging, and the USD JPY, this is technically up Kijun Sen, but the Kumo is flat. So here is another example of the potential fake Senko span A. If you look at the Senko span A, this is still on the same level as the previous Senko span A level. So until the Senko span A breaks the previous Senko span A level, that will be the range. So that means the market might turn bearish anytime soon. So I will stay away from USD JPY. And the USD CAD is retracing back to Kumo, but it's in between Kumo and Kijun Sen and Chikou span touching, so I won't look at this one. And USD Swiss franc is also ranging exactly in the Kumo now. And Pound USD is downtrending still, so it may continuously go down today. Today is bullish, but in the long term, it potentially goes down. So I will just keep monitoring this one. And Pound JPY ranging. Pound AUD is also ranging in the P wave. And Pound CAD is bearish. I can see that the Kumo is down, Kijun Sen down. But price is below the Kijun Sen. Chikou span below the candles. So this is good. I will just mark this one and look at the lower time frame. The market might be bouncing by this descending trend line. So we'll see if it plays out. And the Pound Swiss franc is ranging right now. AUD USD is ranging. And AUD CAD ranging. AUD JPY is ranging too, retracing. AUD Swiss franc ranging into the Kumo now in the daily chart. And CAD JPY is also below the Kijun Sen. Chikou span too close, so I won't look at this one. CAD Swiss franc is into the Kumo now. And Swiss franc JPY is technically uptrending still. So Swiss franc JPY has been downtrending for the last 1 week or so, and the market is at the previous support level. Well, slightly broke the support level, but it might bounce and goes up this way. So, but today is bearish, so most likely I won't take a buy. But I think there is a potential bullish. But once the market breaks this level, 123.52, then it might turn bearish. So we will see which way it's going. And since we cannot tell which way it's going at this point, I don't look for any trading edges. It might go down like this way. So we'll see. Yeah. Oh, so I do see many comments now. So let me cover some of the comments. And let's see. Orca says, whenever I lost twice in a day, I just walk away. Even that, it's a testament to my mental fortitude when you lose 5+ trades in a row. Yeah, if you lose twice in a day, then you can walk away. That's a good strategy. Yes. No matter how big the trend is, no matter how many pairs are trending at that time, if you promise yourself to leave charts if you lose 2 times per day, then you should do it. Yeah, because you might lose more and it can harm your psychology more. It happened to me too when I was newbie, so I know exactly how you feel. Yeah, it's painful. It's painful. Hussein says, I did buy gold at 1824, target is 1880. All right, so gold, let me check. Is it still going up? Let me see commodity and gold. Daily chart. So yeah, looks like it is still going up and it's reaching to the V target as I mentioned like 2 days ago. So, but before that, let me simply take the Ichimoku analysis, simply speaking. So this is bullish right now and yeah, looks like this is going up. In terms of Kumo, it's flat. Kijun-sen, Tenkan-sen flat. So it might trace back to Kijun-sen, Tenkan-sen in this case. So if you're holding the buy, then you might want to consider exit timing because it might retrace backwards. It might retrace back to the previous resistance level, which was 1832.74. So yeah, we have to be careful for the retracement in this case. Today is bearish, but overall is P wave and there is an engulfing structure. This bullish candlestick on the 10th November high and low has been including engulfing 2 future candles. So in this case, if I were to buy, I would wait for a breakout of the previous high level, which was 1868.46, and look to buy. Let me just change it to solid line. So if the market breaks that level, then I will look for buy. Otherwise, it might retrace and goes up. So you might want to look for an exit timing right now. And in terms of price theory, the market is on this ABC wave and target as D. It reached to V target 2 days ago, and since it's too bullish technically, I expect the market goes up to V target or even to the E target in the future. But since tomorrow is the Henkabi, so we have to wait and see if the market reaches to V target today, tomorrow or not. But yeah, overall, you have to be careful for the retracement is my opinion for this particular market. Yeah, let's see. Hello, Ali. Good to see you. Combine profile size with the Ichimoku and Z-score financial analysis indicator. I'm not sure. I have never used these analysis, so I'm not sure. I simply use Ichimoku and price action lines and that's it. So my analysis is very, very simple. And Ichimoku you can find on any platforms nowadays. And price action lines, you can find these tools also on any platforms. So that's also the reason why I use Ichimoku in my strategy. And also in the lower time frame confirmations, I use Bollinger Band stochastics, but these are also found on any platforms. All right, John says, hello Kay, thanks for your knowledge. I took a buy on .JPY earlier today when all the criteria was met from daily chart to middle time frame to Bollinger Band walking, but it's now against me. Any help? So the question is, have you thought about exit timing before you enter the market? Is the question. So the tricky part about the market is that you can't control the markets. So no matter how strong the trend seems to be, the market can retrace anytime. It can retrace anytime. So the question is about the risk management. So you can see that the daily chart Kumo's flat, and let me see, in the forward chart it is also flat. So in this case I won't take a buy, first of all because it's flat right now. But if you take a buy, then let me go down to 5-minute chart. If I see 5-minute chart, if I take a buy somewhere here and the market reverses backwards all the way, then I would most likely exit when the market breaks the previous support level. Previous support level around here, this level at 113.96. I will simply exit. That will be one of the exit timing. Or when I see dead cross stochastics or band walking against the major direction, in this case bearish, then somewhere here I will exit. Because what might happen is that since it's bearish market right now in 5, it may go down on this bearish in wave. And if I start to see this potential bearish in wave in the lower time frame, that will be when I exit. So even if I see daily charts is up and middle time frames also up, if I start to see 5-minute chart or 15-minute chart that retrace, then I will just exit then. So we have to think about the exit timing before you enter, and then you take trades. And when you find a scenario of the exit timing, then simply you have to execute the exit. And that also should be taken into your strategy. So entry timing, entry strategy, and exit strategies should be both counted when you enter the market. Is my advice. All right, let's see. Trader Steve says, "Hi Kay, what are your favorite indicators to trade?" My favorite is Ichimoku and stochastics and Bollinger Bands. And I also use lines, Fibonacci, bounce, and some other tools. But basically, I use Ichimoku to capture the bigger picture of the market in higher time frames. And when I try to look for a trading edge, then I look for them by the lower time frames by using Bollinger Bands and stochastics like this. Yeah. Have you noticed any major technical differences between trading the indices and forex pairs? Yeah, indices tends to last longer in its trend direction than forex. In forex, especially these major ones and minor ones, the trend can last maybe around 3 days or 4 days maximum. But most of the cases, it goes up and down within a week. So even if you see trend direction in the daily chart, it retraces backwards sooner than the indices or stock market. And that will be the major difference. So I have been backtesting my own strategy on the stock markets indices because I'm planning to trade nearly soon on these other markets. But I shift the time frame basically. So right now, I take the daily chart or the forward chart for forex market, but when I backtest on the stock market or indices, I can take weekly chart or even monthly chart for the major direction, and confirmation I take based on the daily chart or the forward chart, and I take trades based on 1 or 30-minute time frame. But I use exactly the same strategy, but simply by shifting the time frame higher, then I can become a swing trader. But or if I shift the time frames lower, then I can become an intraday trader. So forex works. My strategy works the best on the daily chart or the forward chart trends, directions. But on the stock market or indices, you can take monthly or weekly time frame directions. Yeah, so each market behaves differently. So I have seen that the for example, forex exotic pairs tends to last longer trend direction than the major ones, but the spreads are higher and it's volatile in the lower time frames on these exotic pairs like Chinese yuan or Mexican peso or sometimes New Zealand or sometimes even Swiss franc pairs also has usually higher spread, bigger spread, and spiky in the lower time frames. So on these pairs, you might want to take like weekly trend direction and take trades based on like 1 hour or 30-minute time frame. All right, hello Archback, good to see you. Thank you for joining as well. He says, how long have you gone without trades setups? I have been using my strategy for the last I would say 5 years or 6 years, and it's been working great for myself on the forex markets. But sometimes I don't take trades, even if I see some trending markets, and even if I see like confirmations, I don't take it sometimes, because I sometimes want to see how the market goes, just to check my analysis, to build up my confidence, so that when the next chance comes, then I can take trades confidently. So yeah, sometimes I don't take trades like 3 or 4 days or even weeks. I don't take trades. Hello Jalaj, good to see you here. He says Euro USD today, sudden spike, got stop loss. Yeah, so make sure you put the stop loss, because to prepare for these sudden spikes in the market. Stop loss is like a seatbelt on the highway, so you have to take it always. All right, good to see you everyone. Thank you for joining. All right, Lut says, lower time frame trading is very interesting. Any video post about this? Yes, you can find tons of videos about my entry strategies. You can come to my website from the link below, description, and scroll down a little bit. Then you can find some playlists here. So you can find my entry confirmations on the Forex Tester. I used to run Forex Tester 4, and now I run Forex Tester 5 and talk about my entry confirmations and also exit confirmations, demonstrations on this tester. So you can find some videos here. So yeah, myself is a trend follower. So whenever I see trends, I take it. Otherwise, I don't take. And I do so by using Ichimoku in multiple time frames. And that is called Case Trading Strategy. That's my name, Case Trading Strategy. Multiple time frame Ichimoku and entry confirmation, stop loss and break-even timing, and lot size, risk management, and exit timing in psychological management. I name it Case Trading Strategy. But at the same time, I read the original book of Ichimoku and I studied it. I have read these original books more than 20 times already, and I output my learning on this YouTube channel also. And you can find it on this playlist, Ichimoku Basic Lecture, and this is mainly following this Ichimoku original teaching, like Tenkan-sen, Kijun-sen cross, Kumo breakout, or Chikou span breakout, time cycle, wave analysis, and price theories like this. And I have this 2 communities here. One is Ichimoku community to master Ichimoku itself, not my strategy, but master Ichimoku itself from the original book is the Ichimoku community. And if you wish to master KTS, my own strategy, and I share it on the GTS class. But yeah, so here is a playlist. Coming back to your question here. John says, you're right, because from the beginning was in profit regarding the pair USD-JPY, but checking the currency strength chart, USD is going down, yen is up now. Any idea of what's moving the pairs? Many factors. Let me check the calendar today and see if we can find any USD or JPY related news for today. So whenever you doubt why sudden spike happens in the market, I recommend everybody to check the news website and see if there was any news related to these pairs. So I'm using fxstreet.com and simply click on the economic calendar and you can find this news website. And it looks like there's no big news today for JPY or USD. So I think it just happened. The spike just happened for any reason. And yeah, we can't tell anything more about that. So yeah, so that's why risk management is always very important. All right, Hans says Dow, please. All right, so Dow Jones, let me check. So let's see, index and US 30 Dow Jones. Daily chart by Ichimoku. Now it's retracing backwards. So it's retracing backwards this week, and now Kumo is flat, Kijun Sen flat. So it might retrace all the way back to the Kijun Sen here. So in this case, I would delete the up arrow already, and it might retrace back to the Kijun Sen or back to the previous resistance level. And this is not a good timing to buy right now. You have to confirm the pushback and buy afterwards. Otherwise, it might keep retracing back to these levels. And but let me see. If you look at the weekly chart, it's still up. So the trend can be continuously uptrending. But if you look at the daily chart, it might retrace. So it could retrace backwards and bounce like in this direction of the weekly time frame. All right, John says, once again, I love the color settings of your Bollinger Bands. Can you show us? Oh, sure. Yeah, so Bollinger Bands I use here. And in terms of the color setting, I use double Bollinger Bands. One with deviation 1 and other one is with a deviation 2 with 20 SMA in the middle. So one, I have the color like this. So middle line is 20 SMA and I put dot red, and upper band, lower band is like this and a slight background. And as for this, this is deviation 2. I put a basis as the same color, but upper level, lower level, I make it like a little gray, so that it doesn't show like vivid white, but instead it shows like a gray color, and it's easier on my eyes. So these are my Bollinger Band settings on TradingView. All right, let's see. Archback says, do you have any particular reason to trade other markets? Other markets, yes. You mean besides Forex, I will start to trade stock market indices to diversify my asset. So right now, I only trade Forex, or I mainly trade Forex. Sometimes I trade gold, but I don't do so much. I mainly trade Forex, but now I want to start to diversify my asset, not only into Forex, but into some other markets, and that's the reason. All right, thank you for joining, everyone. Great to see you on this live stream, and happy Friday to everyone. Dot says, hello, Kay. When I entry all Ichimoku points to that trending direction, but for some time going, Kijun Sen and Senko Span B start to flat, while other essence remain point to that trending direction. So should we exit when we see that, or we wait until all the lines are flat. Yes, you better wait until all the lines become flat. So, like on the daily chart, you can see that the market is flat now. You see the Kumo flat and Kijun Sen flat, and market broke the Tenkan Sen bearish. And this is when you stop looking for the buy or when you exit. But before that, the market has been moving up, and Kijun Sen has been going up, and Kumo has been going up too, and you don't exit. But once you see the retracement, breakout of the Tenkan Sen and Kumo flat, Kijun Sen flat, then you better look for an exit timing, because it might retrace all the way back to the previous resistance or Kijun Sen in this time frame. Looks like there's a maintenance going outside on the window. So if you hear some noise, please just ignore it. All right, let's see. Yeah, good to see you, everyone. Thanks for joining. Oh, I do see a person outside right now on the window. it's quite interesting. It's like a real Mission Impossible. All right, so let's see. The next one is okay, from Alfonso. He says, "Hello, how are you today? I'm fine. I'm doing very well right now. Gold and silver, very good trade yesterday." All right, so yeah, gold looks to be range right now. This is once again gold XAUSD. It's kind of retracing backwards now. So yeah, I would recommend to wait for the breakout of the resistance 1868.46 and buy afterwards. Is my opinion. Right, so let's see. And okay, so the next question from Jalash is Sensei, how many pips of stop loss level do you keep? Recently, if I keep stop loss using the 15 or 5 minute chart, then SL is hit immediately, but with higher time frame, SL is too wide with the most risk of loss. Yeah, so that's a balance between the distance, the stop loss, and the risk per trade. If you go for bigger stop loss and decrease lot sizing, and the chance for the market to hit the stop loss will be relatively lower, but even if you see the market go towards the direction, you won't make so much profit because you have to decrease lot sizing to make it 2% to the stop loss from your position. But if you have the tight stop loss, then that means you can increase the lot sizing to make it 2% to the stop loss from the position, but the chance for the market hit the stop loss will be relatively higher. So it's up to your style, and you have to reasonably think about exactly where the stop loss should be. And if the market starts to reverse after the entry, then you have to think about the exit timing. And that is a part of the risk management. And personally, I prefer to have tighter stop loss depending on the 5 or 15 minute time frames, because so that I can go for bigger lot sizing, so that when the market goes towards my direction, I can run bigger profits along the way. And that is one of the reasons. And the other reason is I prefer the tighter stop loss, because if the market reverses backwards, then I can immediately exit. And I prefer to exit immediately after I take a buy or sell if the market goes against me, because it's time efficient. I don't let the market run with the loss or losing pips in a long time. So if, let's say, my stop loss is let's say 100 pips below, and it's wide, so the market might fluctuate. So even if I start to see market reverse, it's all still very, very far from the stop loss, and emotionally, psychologically, I feel secure, I feel more safe. But what if the market start to reverse backwards continuously? Then you have to keep watching the market as the market reverses backwards, and as you run some losses, you have to keep watching until you confirm the exit timing. And sometimes it may take like a couple of days until the market reverses all the way back to the stop loss 100 pips. And for myself, psychologically, it's not healthy, but instead I prefer to cut the loss immediately and get ready to the next trades. If the market still goes towards my direction, then I prefer to exit and re-enter the market. And that's another reason why I prefer the tight stop loss. But the same risk. I take 2% per trade, that will be the same risk. But I prefer the tight stop loss for these two reasons. So it's all about the probability. Forex or any trading is all about the probability. So, and it also depending on your trading style. You know, some people like to scalp, some people like to swing trade, some people like the wider stop loss, some people like very tight stop loss, and it depends on your preference and also your trading style. There's no right or wrong answer to this. It's just different style. But myself, I prefer to have very tight stop loss based on the lower time frames and take profit. TP will be based on the daily chart or the forward chart time frames, so that naturally my risk and reward ratio can be greater than 1. So in the month of October was very nice because I got nice pips on the 2 trades. That was one of the Swiss franc pairs, and on the other one, Euro AUD, I got some nice over 200 pips on these trades, and my PF, my profit factor, risk and reward ratio overall in average was almost like 8 because of this big profits in the month of October. But in terms of risk, I cut the loss very soon. I cut the loss in like 10 pips in average if the market reverses. So yeah, so the risk management is very important in that sense. Because this is what I also tell to the GTS members, is that the concept is like we have to keep planting seeds and to get the returns after after it sprouts, you know. But you never plant the seed randomly on any fields. You have to plant the seeds on a fertile yard so that you expect these seeds to be growing, sprout and grow. And you get the fruits and you reinvest these fruits. But sometimes, even if you plant the seeds on the fertile yard, sometimes it doesn't sprout. Out of 10 seeds, maybe 5 or 6 or sometimes 7 seeds won't sprout. But if 3 sprouts out of 10 seeds, then from these 3 seeds, you get more than 10 fruits. And that is a success. That's a mindset of as an investor, or you know, for those who expect returns. Then you can grow like this way. And for myself, these fertile yards are trending markets. So I always plant seeds on the trending markets. I never plant seeds on the range market or Ichimoku in higher time frames. But still, I fail sometimes. Like Orca mentions today, you know, the market reverses backwards. Even if I plant the seeds on the trending market, in that case, I just forget about it because it just happens in the market. But I know if I keep planting the seeds on these trending markets, then eventually I will take these big pips. Then these big pips, these big fruits can cover the previous small losses. So this is my strategy, and that's my mindset, basically speaking. So that's why I decided to become myself as a trend follower, not trading like whenever I find any like edges. I only take trades when the market is trending by Ichimoku. That is for sure. All right. Yeah. PNQ, thank you for joining. You are a soldier, man. Thanks again. You're welcome. He says, when I started watching your videos, I have gained 5,000% profit. That's a lot. That is a lot and lot. Okay, you should invest in durable energy markets like solar. Yes, I have been watching some green energy markets recently, and I'm thinking to invest. Solar panel or green energy, like a battery or these energy field is very interesting. This sector is very interesting for myself, so I have been studying it and watching these sectors right now. Trader Steve says, do you find the market gap is almost always covered back in the few hours? Today, the DAX opened up 30 pips plus and then reversed back down to close gap. It happens. When it closes the gap, then the market goes towards that direction of the closing the gap. So yeah, so here is the DAX daily chart, and let me see, weekly, daily forward chart. So in 1 hour chart, I do see the gap in between over here, and it filled backwards. And usually the market fills the gap, but if it doesn't fill the gap, then most likely it goes towards that direction. But now that the market fills the gap, it might continuously be in the range, is the expectation. So same is true here. This is the market open on the 9th of November. There was a little gap in between. In Forex, we hardly see gaps. But sometimes we do see the gaps in Forex market between Friday and Monday. But in stock markets or indices, the gaps happens like many times. So in this example, the gap down happened on the 9th of November, and it filled the gap. So once it fills the gap, then you expect the market will be in the range. But in case the market doesn't fill the gap, and it continuously go down this way without filling the gap, then most likely the market goes towards that direction on that day. So this is the principle in general. Of course, it's not 100%, but in general, it goes like this. Yeah. Archback says, did you see the ad in Burj Khalifa? No, I haven't. Maybe I will check. Was there any interesting ad about Burj Khalifa recently? I'm not sure. Hello, Kevin. Thank you for joining, and thank you for the comments, as usual. Yeah, my trades has been going much better than when I was in Japan because of time zone. I feel much better to trade in Dubai, especially New York session. I can trade in Dubai time. So yeah, I found it's more easier for myself psychologically that I don't have to stay up late at night to trade the New York session. Because when I was in Japan, due to time zone, I sometimes stay up late, like 1 a.m., 2 a.m. sometimes, and trade. And sometimes it wasn't unhealthy. So I prefer the time zone in Dubai. John says, is it always that if daily chart is retracing, the forward chart is also retracing? Not always. Sometimes you see daily chart retracing before still going up. Sometimes you see that. In that case, you follow the forward chart uptrend. Okay, so yeah, good to see you everyone. Thank you for joining. So it's about like 1 hour now, so I am about to end the live session for now. Okay, good to see you. To see you. Jalash, you're welcome. It's my pleasure to share my views and share my analysis in the community like this on YouTube. If there's no support, then I wouldn't be able to do this. So I really appreciate your participation and also your support as always. And this is actually for both of us, to be honest. You learn based on my analysis, but at the same time, I learn also from your questions. Sometimes these questions I never think of, physically. Unconsciously, I think about these questions, but consciously, I never thought about it. And when I start to reply to these questions, I learn myself. I realize myself that I know this and I know that. So it's for both of us. So yeah, but really appreciate the supports as always. All right, so let's end the session now. So thank you for joining and watching until the end. If you liked it, please press the like button before you leave. That would be great. And I will see you on the next one. So oh yeah, by the way, if you're interested in GTS in January, please let me know by email through the description below, because I have been getting many emails about GTS and it looks like it's filling soon. It will be filled soon, so please let me know. There are 2 seats available in the month of January 2022 for GTS, so please do let me know. Alright, so I will just change my screen to full. So thank you for watching, and please always make sure to put the stop loss and check news before you take trades. So I will see you in the next one. Until then, please stay healthy, stay safe, and stay gold. Alright, bye for now. Mata ne. Thank you.